Welcome back, folks. We have the Dow right now down 5. You get the Nasdaq up 18. Let's go to our man Tom in Plymouth. Hey, what's going on, brother?
Hey, good morning, Tom and Tommy. Happy New Year to you.
Happy New Year, Tom.
Yeah, let's make it a great one, man.
Oh, it's been going well so far.
Yellow market action to keep you busy?
I love these J-Nugs, the J-Dust, the Dust. I don't know. I haven't been doing those J-Dust and Dust for a little bit, but these Nuggets, the Nugget and the J-Nug, oh, my gosh.
Yeah,
these things are on fire.
Hold on, man.
It's a beautiful thing. It's a good way to kick into 2017. There's no doubt about it.
Got to make sure you're on the right side, man.
And you got to understand these are daily investment vehicles, man. But they're great. They're great trading vehicles.
I was just going to say that because you said that. I don't know if it was yesterday or the other day.
I think it was yesterday. We were talking about it.
Yes.
Yeah, because, I mean, even going back to last week, I was in it, and then on Friday I got out, but I got out just in time, and all of a sudden, Friday afternoon, it was like, what the heck just happened to this thing?
That was intense.
So,
yeah.
So I bought some more. So I said, that happened to I'm buying some more.
Yeah.
So it was like, oh. But now I'm in, I guess, the dilemma of just moving the stop up and just kind of seeing what's going to happen for this little ride here.
So let's take a look at it. If we start with the Nugget, folks, NUGT, the Nugget is the Direxion Daily Gold Miners Bull 3 times leveraged New York ARCA Gold Miners Index. So if we go over to that GDX just for a second and take a look at it, this came off the bottom with strength. Last week, bottom line, excluding the Friday. Well, what happened on Friday, folks, it did get to a higher price and then gave it up in spades. But what you're doing now is that it looks to me like the GDX is going after this 2570 mark.
That's the day after the election too, just to put it.
Yeah, which is pretty cool.
You can see how things went. In terms of that's the election day right there. This is the day after. That's when markets digestion would happen.
Exactly.
Yeah.
And that's where it's going after. Because the bottom has 24, the top is 2570. If we go over to Nugget and we take a look at Nugget now, Nugget is trading at 992. You already launched the downdraft from December 14th. You're into the downdraft from the 9th, 10th, and 11th. So that's saying, hey, it's pretty intense, man.
Now let's just jump back and forth for a second, because this is a great example of, daily investment vehicles, right? Because this is the same day. This is November 9th, right? The low of that is 1306, and we're not even at $10 right now in this. Whereas if you go back to the GDX, we're much closer on a percentage basis to that same day. So that's, you don't want to think, whereas if you're in the GDX, right, you hold that position, you're almost back to break even, maybe. You're not even close. You need another 30% in Nugget to get back to your break even.
Right.
Great example of why, you just can't hold these daily investment vehicles for a period of time and think that they're going to react in the same way as the underlying index.
Right.
Yeah.
No doubt. Because they're not. And that says it right there.
Yeah. They ramp up on the way up and they scale back down on the way down, and that changes how they react over a period of longer term time.
Exactly.
Yeah.
And if they go down on you, you got to make sure you get out of them quickly, because they can go down pretty fast.
Well, here,
we're going to go to some natural gas.
Well, yeah, we can do natural gas too. We're doing natural gas yesterday.
First, man. Dust
but watch when you see dust.
You don't got to go much further than there. There you go.
With dust, you're a hero on December 20th. It's at $72. On December 28th, it's at $55, and then on the 29th, you're at $43. So that's important.
And now you're at 36, 50% cut.
Yeah.
So it's literally 50% to the right there, half your position gone.
Right.
Yeah.
And UGAS, that's the UGAZ.
Oh,
that's the one we were talking about yesterday.
We were looking at this yesterday. That's what I think we were referencing the daily investment deal. Yeah.
Right. It was at $48 on the 30th, and it closed at 46, and then on the 3rd,
welcome to 2017.
It opened to 28,
and it closed at.
I was looking at the DGAS there last week, and I don't know why I didn't buy it at 289, but I was like, and that thing took off.
Well, that's because you made so much money on the J-Nug and the Nugget.
Well, I only know these 4 stocks in the stock market now.
You only got to know what you love, man. You know, you do what you like and what works. That's it.
There's nothing wrong with that, man. I think there's everything right with it myself.
In all seriousness, we laugh, but you focus on what you know. You become accustomed to their action. You become used to, how things react to underlying moves, market action, dollar, all that stuff where you understand how this is going to move, Tom, whether it's the dollar, the market, and currencies across the board. And,
that's why I love them so much. Yeah. It's the underlying moves, okay? And if you pay attention to the index that's going to, when we're talking the metals market, you pay attention to the dollar, you have more probabilities, I feel, that in your favor trading these.
You just understand all the variables at play.
Right.
And you can't understand all the variables at play of every index and every stock and every commodity. So pick what you know, focus on it, and then you really understand what's what's affecting what you're trading.
Totally. Yeah. So now what are you going to do?
I am just going to sit tight and watch, and it never hurts to take profits. You can't lose doing that.
No, you can't.
True.
You can always say, oh, I wish I stayed it, but, if you take them and you got them and you put them in your pocket, it's like walking away from the craps table a winner instead of staying there another 15 minutes.
It is, man, because, losing an opportunity is not the same thing as losing your actual investment.
Right.
You might miss an opportunity, but you're not losing money. There's a different deal. Missing opportunities is not the same as losing actual equity in your account.
Right.
So
not even close.
Not even close.
Right.
Exactly.
Right.
Well,
It's always
I just
another
want to thank you guys again, and starting off the new year very well. Thank you very much. I appreciate your help.
Okay, Tom, have a great one, man. Have a safe one.
Good to hear from you, Tom.
Yeah, you too.